Welcome to ForexTV.com's PM Exchange. It's Thursday, November 29th. I'm Remy Hoki. Today I'm joined by Kathy Lien, Chief Currency Strategist at DailyFX.com. Good afternoon, Kathy.
Good afternoon.
Thanks for coming on the show today.
It's always a pleasure.
Well, as we near the end of the New York session, we're seeing U.S. stocks trade mostly flat after rallying in the past 2 days. And we're also seeing commodity prices pull back. But looking at the major currencies, we've been seeing dollar corrective strength against the euro and sterling. So as we head into December and year-end, if you could give us your dollar forecast.
Well, I think that what you're seeing is exactly what you just said, just a corrective strength and not necessarily a bottom in the U.S. dollar. I'm a big believer that we'll probably see further dollar weakness for multiple reasons. Number one, December tends to be a pretty bad month for the U.S. dollar. On DailyFX, we published a seasonality report, which you can just search for. And in that report, we found that 70 to 80% of the time, the dollar tends to weaken against the euro during the month of December. There's a lot of reasons for that, like repatriation and things like that. But this could be even more severe this coming December because of all the problems that the U.S. economy faces. We had today horrid new home sales data. And I think that ultimately what we're going to see is further dollar weakness into the beginning of next year.
And looking ahead to tomorrow's New York morning session, we do have personal income and spending data as well as Chicago PMI coming out. So if we could move on to technicals, and if you could give us your levels for the U.S. dollar against the euro and the yen.
Well, what we've been seeing right now is the euro dollar has really been consolidating near its highs. And given what I just told you about my outlook for the U.S. dollar, I think that we'll probably still make a test for 150. Certainly not tomorrow, but maybe over the course of the next few weeks. Technically, the ranges that I'm looking at in the euro are 147 to 150. 147 is really going to be pretty significant support because it's the bottom of the range from the past few trading days, and 150 is just a psychological high. If we clear through that, we can just sort of burst past it. As for dollar yen is doing completely different things from the euro dollar. Dollar yen has actually been pretty weak. Now we did have a recovery, 2 days for the past 2 days, but I don't expect that recovery to last for the same reasons why I think the dollar will continue to weaken. So because of that, I think that the range in dollar yen is going to be about 107 to 111.50.
Okay, and now let's move on to the sterling against the U.S. dollar. In today's session, as we near the end of New York trade, we're seeing sterling dollar trade at 206.10. And that has pulled back significantly from yesterday's session. And we had housing data come out from the UK, which showed that November housing prices fell the most in 12 years. But if you could give us your short-term as well as long-term forecasts for the currency pair.
Well, as you said, UK data has been horrid, probably just as horrid as US data. So it's good reason why the British pound has been weak for quite some time, and it's weak today. I think it's going to continue to remain weak. So my forecast is for a move down to 204. The ranges that we're looking at are about 204 to 208. If we break 204, obviously we're going to see much more significant losses. But I think 204 is much more a realistic target at this point.
Okay, and let's move on to the U.S. dollar against the Canadian currency. In Tuesday's session, we saw the pair briefly hit parity, and it is now trading around 99.70. There has been a lot of volatility in this pair, so going into the coming sessions, if you could give us your forecast for the pair.
Well, dollar CAD, believe it or not, on an intraday basis is trading like pound yen, I think. You've seen, 50 points a rally within a blink of an eye, 50 points loss. So there's quite a bit of intraday volatility in dollar CAD. However, take a step back, dollar CAD is actually trading in the rather, broad trading range, and it really has remained there for about the past week. Now, I am looking for further gains in dollar CAD, but I think that those gains will be capped by 101.50. It's a very, very significant level. We've got Fibo support there, moving average support, also, to break down point from a few months ago. So that will probably be the top of where we see. In terms of what a retracement could come down to, I'm looking at about 97 cents in dollar CAD.
Okay, and now that we've covered the major pairs, I'd like to move on to the yen crosses. We've seen the high-yielding currencies of the Aussie, Kiwi, as well as sterling pull back against the yen. So if you could give us your ranges for the yen crosses.
Well, most of the yen crosses are basically moving in lockstep with the Dow, and you're seeing, pretty much that very, very prevalent in the past few trading days. I think, like dollar yen, I expect more losses in the carry trades in general, because carry trades do not thrive in markets where we have 300-point days become the norm, and or not 300-point, but triple-digit days become the norm. So I think what we'll see is a lot of vulnerability, and as a result, just basically more losses in the yen crosses.
Okay, and last but not least, looking ahead to the FOMC meeting on December 11th, we saw the market move yesterday based on the Fed's Vice Chairman Cohen's comments, and we also had the Beige Book coming out. So just based on your forecast, if you could give us your rate outlook looking ahead to the next meeting.
Well, the interest rate curve is pricing in a 100% chance of a quarter-point rate cut. And I think that's exactly what's going to happen. The Fed's going to cut by 25, and the real market mover will not necessarily be the interest rate change, but it will be the comments in the FOMC statement. Right now, the curve is pricing in 22% chance of a 50 basis point cut next month, which tells you that one rate cut won't be the next rate cut won't be the last. Basically, we'll probably see one more in the first quarter. And depending upon whether the economy actually absorbs that well and has actually managed to recover from it, we could see more beyond that.
Okay, Kathy, as always, thank you very much for your insight and analysis.
Always a pleasure.
This has been your Forex News with Kathy Lien from dailyfx.com. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended the session in positive territory with the major indexes mostly flat. The Dow managed to eke out a third straight session of gains. The market continues to weigh the Federal Reserve rate outlook as well as the latest economic data. Earlier today, the Commerce Department reported that U.S. Q3 GDP grew 4.9% on an annual basis. This was the fastest pace of growth in 4 years. And new home sales rose by 1.7% to 728,000, below expectations. This was mostly due to downward revisions in the previous months. At the end of today's session, the Dow Jones Industrial Average advanced 22.5 points to close at 13,311.73. The tech-heavy NASDAQ added almost 5.25 points to end at 2,668.13. And the S&P 500 closed flat, up 0.70 at 1,469.72. In the fixed income market, U.S. Treasury bonds rallied as weak economic data sent investors towards safer haven assets. The benchmark 10-year note rose a full point, with yields down to 3.94% from 4.05% yesterday. The 30-year bond rallied with the yield down to 4.35%. In energy, crude oil futures closed up with slight gains on the day. 3 out of the 4 U.S.-Canadian pipelines that were shut down after an explosion were restarted today. In the overnight session, on the heels of this news, crude oil futures rallied over $4 in electronic trading. January crude oil ended up by 39 cents at $91.01 a barrel on the NYMEX. And elsewhere, December RBOB gasoline fell 1.09 cents to close at $2.2648 a gallon. December heating oil added 0.33 cents to close at $2.5771 a gallon. Earlier today, the EIA reported that U.S. natural gas storage fell 12 BCF in the week ending November 23rd. At the end of today's session, nat gas futures for January delivery ended down by 3.4 cents at $7.452 per million BTU. Over in the metals complex, gold futures finished below $800 an ounce. This came as the U.S. dollar saw corrective strength against the euro and sterling. December gold fell $5 to end at $795.30 an ounce on the NYMEX. Meanwhile, December silver fell 9.8 cents to $14.237 an ounce. December copper added 5.75 cents to $3.0635 a pound. This afternoon, I'm joined by Tom Puckett, commodity broker at KS Futures. He'll recap today's action in energy and metals and also give us his outlook in the short term.
Thank you, Remy. Today we're looking at the markets for the metals as well as the energies. Very interesting trade this week, very active trade it seems following Thanksgiving last week. On the reports yesterday, the distillates inventories had a reduction of about 89,000 barrels, and so that definitely is showing a small difference. Crude oil was down 452,000 barrels. Not a huge amount, but at the same time, interesting and significant this time of year. Gasoline inventories, however, were actually up 1.44 million barrels, so they were notably increased compared to the other products in the complex. There's talk this week of Saudi Arabia increasing their production, and that certainly has probably weighed on the market pricing and the action in the market as much as anything. The crude oil currently, as we're looking at the January contract, is trading around $91, in the mid-90s on the low and the high side being about 95.17 or so. Prospects on that may be that we might see a reduction further in price, crude oil as well as the products. Natural gas came out this morning with a draw of about 12 billion cubic feet, and we find that storage is pretty well full. So the general look on the market is that we may be looking into the $6 range on the natural gas pricing. Of course, we haven't had any major crude or cold weather yet this year, and so that certainly will have an effect if some Canadian air comes in or Arctic air comes in and drops the temperatures to where the usage starts going up. We may see a stabilization of the reduction. In the metals and the gold, we've in the last few weeks, a few days or so, been kind of all over the place. Back at the earlier part of November, we were up at 848, high price on the gold, and we've come down currently to where the gold is in the 795 range, definitely under $800. And the question is it going to be a sell-off? Is it going to reduce? Very well could, but there also is a lot of profit taking. I think overall gold is still looked at as a pretty favorable place to find refuge, a haven type of contract. We see the gold also following with its little brother silver. Silver is down about 10 cents today, $14.40, $14.50 in that range. The support points we find in the gold currently, we're looking at a pricing based upon December at $7.95. We have a support line at 790.36 or so, and there's another one that's just a little below at 782.65. Those hold. We may see the price go sideways for a while, but we have about 4 price lines just in that mid-range that seem to be pretty strong for gold. On the silver side, we are looking at a support at about 1435, and that's on the December contract. 1422 is where we are last shown trading. So we're a little bit under that, and that actually becomes a resistance point. Next point down is around 1406, 1407, somewhere in that range. On the crude oil, the pricing that we've seen, we've had an interesting day yesterday. We're down $3-some today. We're up 40 cents. We've been down lower, been up higher, and just moving all around. Looks like the market's looking for a hiding place. We've got a support point at $90.35. Again, looking at the January contract, we're looking at $90.35, and currently that is the price shown on the electronic board. We have further support at $88.97, $87.59, $86.21. There's a lot of discussion that we might go to the mid-80s before too long. It very well could happen, but we could also see any number of things happening in the world that would cause the price to stabilize and perhaps increase. Natural gas, again, it looks like it's a weather and storage-related market. We have support at $727.35. This is based the January contract, and right now we're at $746 in that range. So that has definitely held. We've been down to about $738 or so on the pricing. So we still have that holding. Next stop below is possibly under $7. As we look at the Dow Jones, it's at 13.3 as we speak in that range. High has been just recently the highest historical high was 14,270, and there's discussion that the 15,000 mark may be in the minds of some of the long-term traders. The economy seems to be doing very well. Stock prices are holding up in spite of the mortgage problems. Discussion about reduced growth for 08, as well as the real estate bubble possibly having burst or bursting. How far will it really go? The Dow Jones seems to be doing its own thing and just going along famously. We have the dollar at 75 to 76, and the euro is about 147 to 148. So not much change there, but potentials of dollar rise as well as a euro sell-off. The question whether the euro will actually become a trading vehicle for the world as opposed to the dollar, that's discussed. I think the dollar will hold its own. So basically we have a very active market this week. Crude oil is down overall, and yet we're still high. Gold is high, and yet it's down. Let's take a look at it next week and see what's happened in the few days between. Thank you, Remy.
That was Tom Puckett, commodity broker at KS Futures, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.